Alright, my slimes, let's get into it. So, last video we talked about our levels of liquidity. We talked about how to mark those out. Basically, the whole 9 yards. We broke down the strategy. Alright? So now, today's video is going to be focused on how to implement this. So I'm going to walk through it multiple times, step by step, on how we're going to complete this. Alright? So, let's get straight into it, man. So, I'll say it. I'll say the strategy again. We want to mark out our 4-hour highs and lows, our 1-hour highs and lows, 15-minute highs and lows, optional, that's optional by the way, and our session highs and lows, preferably Asian and London, because we trade New York session. All right, next, we are waiting for a sweep on liquidity first. This needs to happen or else nothing else, literally nothing else happens, okay? Wait for a sweep on liquidity on the 4-hour preferably, or the 1-hour. Then after that, if the 4-hour and the 1-hour are in the same trend, then we execute on the 5-minute time frame. We want to see a 5-minute break of structure. All right. If the 4-hour and the 1-hour are not in the same trend, okay. If the 4 hours in the downtrend and the 1 hour's in the uptrend, we will execute on the 15-minute because we want to be making sure we're not caught in a retracement. Okay. Boom. So once we confirm our break of structure, now we can use our continuation confluences, because once we break structure, there's likely a large displacement going on, something like this. We want to see a fair value gap. We want to see an order block or equilibrium or an SMT. If we see price tap into these areas like the fair value gap, the order block, or equilibrium, now all we need to see is buying or selling pressure out of that said confluence, and then we enter. Now, where do we take profits? Where do we actually secure the bag? All right, that would be at the 4-hour highs and lows, the 1-hour highs and lows, and 15-minute highs and lows. Why? Because there's a bunch of people shaking hands right there. I don't know if you guys remember, we went over liquidity and how the market moves through an exchange, right? So above highs, there's people with buy orders and there's people with stop losses. All right, and at lows, there's people with sell orders and there's people with sell stops. Okay, same thing. This is why, honestly, once you see it, you'll start to see it. Like when we have moves up, they're like really slow, but once we sell off, it's very sharp and aggressive because a lot of stop losses are getting hit. Like this today, a lot of stop losses got hit. So we just pooped the bed. All right, so let's actually walk you guys through this stuff, man. All right, we are on the 4-hour actually, so good. We're starting from the top. So what do we see? Ah, feels so good to be just day trading, man. Okay, boom. We see these highs get swept through. Okay, boom. So we're gonna mark. Wait, we need to start from the top. Sorry. All right, we have 4-hour highs. We have 4-hour lows. Cool. Let's check for our 1-hour. So let's start 15 o'clock because these are, well, this is when Asian market opens for me, 15 o'clock. All right, so we see two equal highs right here. I'm going to mark the highest of them. All right, so boom. We see that. We see a low right here. Now you can see your chart's going to start to get messy. Let me make sure that's right there. And then we see some low hanging fruit right here. Low key some equal highs. We're going to mark the lowest of them. All right, so now you see it's getting a little messy. Getting a little bit messy. And then we have some 1-hour highs here as well. Boom. So now we have reference points. We see some hourly highs right here. Boom. Now we have a reference point of where price may head. Now you can see this is a lot of lines. And once you get used to it, you'll start to know which ones may and which ones have a least likelihood of getting hit. Now, if you are paying attention, in our last videos, I believe price wasn't here yet. This just happened today. But you can see we had broke structure with this candle. So this entire move up is an order block. So we've been consolidating within this order block for, what was this, Tuesday? It's Thursday now. For 2 days we were just in this range, and then finally we just broke again. But for the purpose of today, we are going to talk about this. Okay, so now that we marked out our highs and lows, now we can see what's going on. So pretend this isn't here. Well, actually, yeah, pretend this isn't here because this was today's action. So we're gonna act like we're going into the day. All right, so boom, we see a sweep of these 4-hour highs. This is not enough. Hold on. Okay, this slightly broke above the most recent high, but I'm high-key not counting this. Why? Let's look at ES. Boom. So we see ES sweeps the highs. We see NASDAQ barely broke above, but it wasn't enough. So I'm going to call this a sweep. And then if you look right here, what do we see? Let's scroll down. Oops. Actually, let's go back out. We need to see what direction are we in. Okay. The 4-hour is technically in a downtrend, right? We broke structure here, all right? And we're just consolidating. So this is technically a downtrend. 1 hour. We are in an uptrend. Cool, right? Highs, lows. Higher highs, higher lows. All right, so now we're going to execute on the 15-minute time frame. All right, so what do we have? What do we have? We see, okay, we see this low right here going into market open. So we're going to mark this low. I'm going to make this black for you guys. Boom. So now we know we have a break of structure if price goes below here. What else do we see? We see a fair value gap. But what happens? It gets disrespected. All right. So boom. How can we look at this? We see. Oops. Undo that. We see price run these highs. Cool. Okay. Now we know that these are 4-hour highs resting above here. Boom. These are also 15-minute highs resting right there. Now, going into the market open, we see price swing up, swing down. What do we know is up here? A whole bunch of buy orders. So people who were long, right? People who went long and bought some buy orders up here are getting stopped out because what happens? Boom, we go short. People who also had a stop loss right here because of this, right? They're also getting turtle souped because what? Their stop loss is here. So boom. Now you have room for smart money to say thank you very much. Now I'm gonna short. Boom. So we get a short. Boom. Right here, we get an inverse for value gap. And what are we on? The 15-minute time frame. This right here is room for entry. Right? So boom. You go short here. You're going to put your, not your take profit, you're going to put your stop loss above the highs. And then we already have our lows marked out. So we have our hourly lows that we were marking out. Boom. These were all hourly lows. And then we have our 4-hour low resting right here. And if you're feeling really hot, boom, we have these 15-minute lows, these 15-minute lows, and these 15-minute lows, right? So you can see, once we put everything together, let's see what else we had actually. was there an order block? Let's say we didn't inverse because the inverse was just off the back. We see liquidity sweep, inverse. You can low-key enter off that. But let's see. If you went off the break of structure, let's say you didn't know about inverse fair value gaps. Okay, that's cool. Boom. Break of structure. So our leg up prior to the break of structure is our order block. Does it tap in? Yes, right here. This candlestick right here taps in. All right, so you can use that. You see selling pressure out. All right, so your entry would be somewhere within here. All right. Let's scroll back out. So boom. Your entry would be right here. Boom, we see selling pressure, a little bit of consolidation, then drop that eye. Simple. All right. Example number 2. Let's get it. Oh, shoot. All right. Let's see. Okay, right here. We see 4-hour highs. We see, we're going to do Tuesday's price. All right, so we see 4-hour lows here. Boom. These, I wouldn't have marked these out because this is pretty high. Like, this is a pretty, that's a tough move right there. But we'll just mark it out. All right, boom. Let's go to the 1 hour. So we're doing Tuesday. All right. All right, actually, we're doing Wednesday's price action because I'm marking out Tuesday. So, all right, we're doing Wednesday. Let's see. Tuesday. All right, so this is our London session low right here. This is the lowest point between 12 a.m. and 6 a.m. So we're gonna mark this out. Boom. All right, so now we pretty much have our levels. Let's see. Asian session high, Asian session low. Okay, bet. So now we need to determine what trend is this in. Okay, this is a downtrend. Boom. Highs, lower highs. Boom. All right, so 4 hour. Let's see what we're in. Downtrend. Cool. So now we can execute on the 5-minute. All right, so let's go back to Wednesday. Okay, cool. What do we see? All right. You guys can see here that we immediately sweep right here. These highs on the 4 hour. So what's happening right there? We have people going long, right? Because they see a high. So they're thinking, oh shit, breakout. Boom, go long. Gotcha. And then you also have, what else? People stop loss. When you have a stop loss, you're buying back your position at a loss. So smart money is doing the opposite right here. Smart money. Remember when I was talking about equilibrium and how someone is highly likely to buy a ribeye for like $12 rather than $25? Same thing with Wall Street. Same thing with $20. When people are, think of where people are most likely to buy and most likely to sell. That's where they're either going short or long, right? So if a lot of people are thinking long, retail's thinking long right here because of breakout, support, resistance, stuff like that, that right there is creating them an opportunity to sell at a premium price, right? You can sweep these highs. boom. And then what do we see? Instantly break structure. All right, so boom, we'll mark out that break structure. Okay, wasn't perfect, but you see it. So now we can pull our hands out our ass and be like, all right, what other confluences did we learn? We see our order block, which is the leg up prior to the leg down. Cool, I like that. We see, is there a fair value gap? No, there's no fair value gap. Cool. What else do we see? Is there equilibrium? So we want to take our swing highs to our swing lows. Okay, so we are into equilibrium. Cool. This is high probability. What else do we see? What other tools do we have? There's no inverse. Okay. Is there an SMT? Let's see. So we see these highs right here. And these highs right here. Now, ideally, I'd want to see ES up here and then NASDAQ down here. Or I want to see this right here and then ES a little bit higher. Alright, so let's go to Wednesday. Okay. Yeah, so ES is significantly higher like I thought it would be. Alright, so we have boom. This up here. So this is telling me, okay, ES took out major liquidity and NASDAQ is already moving lower. So this is telling me, okay, NASDAQ's telling the future. Now I can take shorts on NAS. Right, now I can take shorts on this, seeing this. So now that we are in this, we can be like, okay, if I see buying or selling pressure out of these confluences, I can now enter. So what? We see buying. We see buying pressure. Okay, then we see selling pressure out of these confluences. Boom, enter. Oops, I put long. Shit, I meant short. Now we can enter short here. Boom. And then where can we take profit at? 1 hour high here, 1 hour high here. Boom. 3-to-1 risk. This is how you do it. Now, if you want to get a precise entry, I do this. I look on the 1 minute for a break of structure. Alright, so we want to see something like this. When we confirm that buying and selling pressure out of those confluences, oh shoot. Ideally, what we want to see is a break of structure. Right, so we would enter somewhere right here. Boom. Because now this is telling me, okay, this is not strong enough, so we'd wait here. This is telling me, okay, we've officially shifted from bullish structure, because you can see we're making a little bit of moves up, and we even fill in this gap right here too, this mini baby gap, and you can see it gets fully respected right here. So boom, you see selling pressure like this, you see a break of structure on the 1 minute, enter here, and then boom, target those. Boom, lows here, lows here. Simple. Alright, somebody was walking behind me. Let's do another example. Let's see. Alright. Okay, though. I want to do Mondays. Now, actually, let's do Tuesday. So we're going to mark on Monday. Alright. So we see 4 hour high. We see, okay, Asian session low, 19 o'clock. I'm on military type timing. Alright, so boom, we got that. We see these highs. This is cool. This is good data. We can mark out the Friday high. For Tuesday, we're doing Tuesday's price action. We just did Wednesday just now. So let's go to here. Monday, what's going on? All right. Let's see. Boom, we have one session high. Cool. Actually, there's a higher high right here. I'm tripping. Okay, but these are equal highs now. So if we have equal highs like this, and you see resting highs right here as well, we want to take that sweep here more serious than that lower high because they're damn near right there. All right, so are we in an uptrend or a downtrend right here? This is an uptrend. All right, so we're uptrending on the 1 hour. Let's see what we're doing on the 4 hour going into Tuesday. Okay, technically we are still in an uptrend going into Tuesday. All right, because you can see during Tuesday's price action, we end up eventually breaking structure, but we are acting as if we are going into the day. So we marked out all our levels. Now that we know, okay, 4 hours bullish, 1 hour's bullish, we can execute on the 5 minute again. So let's go to Tuesday. What do we see? All right, so going into market open, right? 525, 625, 630. All right, so we sweep these internal highs. All right, so this gets respected. Cool. So there's people going long right here. Boom, liquidity sweep. Gotcha. Boom, send it lower. Where are we most likely to send it lower? To these lows. All right, so boom. This is an obvious draw to Asian session low. So now that we see that, we want to see a reaction, okay? So what confluences do we have? We've seen the breakers, no. We've seen the liquidity sweep, okay? So now, what's next? We see a fair value gap right here, right? And you can see it eventually gets filled. Boom. So this is an inverse fair value gap because this bearish gap got disrespected, right? So now once you see this, you can be like, okay, now I can target these highs right here. And if that wasn't enough, you could have targeted something all the way up here, but you can obviously, that did not happen. Now that didn't happen for a number of reasons, partially because SPY or the S&P 500 was at all-time highs and there was just obvious rejection off of that, right? But boom, this is an example. This is a this is a clean one-to-one trade. Simple. All right, stops below the gap. You're good. You're Gucci. Honestly, you could put it like a little bit up right here off of this rejection wick. Yes. So this 1 to 1.43. That's a smooth ass trade, respectfully. Alright, so let's see how much time we have. Holy moly. Alright, I'll be back with another video because this was like super duper duper long. But we'll do a part 2 and a part 3 and then I'll send you guys off. So let's get it, man.